Hello there, I'm Amira David. This is Boom Bust, and these are the stories we are tracking for you today. The ECB will keep the door open for more monetary stimulus. Plus, the EU upgrades Bitcoin from a commodity to a currency. I've got all the details on those stories coming right up. Then Lars Christensen is on the show to talk China. We'll ask him how far growth will have to dip before the Chinese go for another mini devaluation. And in today's Big Deal, Ed Harrison and I will talk about corporate earnings. We'll tell you what to be looking out for in the upcoming reports from Microsoft and Google. If you're an investor, you're going to want to keep your ears and your eyes open for that segment. All that and more coming up on today's show. Don't go anywhere. It all starts right now. Well, the European Central Bank, have to specify there. President sent a very strong signal on Thursday with a decision to hold interest rates where they are and leave them with an economic stimulus program unchanged. In a news conference, ECB President Mario Draghi explained the cautious approach. Take a listen.
Concerns over growth prospects in emerging markets and possible repercussions for the economy from developments in financial and commodity markets continue to signal downside risks to the outlook for growth and inflation. Most notably, the strength and persistence of the factors that are currently slowing the return of inflation to levels below but close to 2% in the medium term require thorough analysis.
That was Draghi pointing to what he is calling the downside risks, including the risk to inflation amidst a slowing global economy. Draghi did go on to say that the degree of monetary policy accommodation would be re-examined at the ECB's next monetary policy meeting, which is when central bank economists are expected to provide new forecasts for growth. A lot of attention has been paid to this decision as analysts try to parse out whether the ECB is likely to expand or extend the bond buying program introduced back in March. But now we know that decision will not be made until at least December at the group's next policy meeting. And from the ECB to the EU, the European Union's top court just gave a huge boost to digital cryptocurrency Bitcoin. On Thursday, the EU Court of Justice said that virtual currencies should be treated as a currency that consumers should not be taxed when buying or selling them. That means Bitcoin is now exempt from value-added tax, or VAT, in the same way that traditional cash is. And it means Bitcoin will now be categorized as a currency versus a commodity. That was a huge point of contention in this case. While the UK had taken the position that Bitcoin was a currency, other countries like Sweden and Germany, they had argued that it should be treated like a commodity. So this is huge news for the cryptocurrency, particularly because the ruling applies here to one of the world's largest trading areas, of course, the EU. It also supports Bitcoin's future as a genuine alternative to fiat currency. All right, to talk about China, we haven't done that in quite a while. Lars Christensen is on the show. Lars is the founder of Markets and Money Advisory and recently gave a speech at the Dallas Fed on policy challenges for China and the U.S. With the U.S. dollar strong and China's economy slowing, the Chinese currency, which is pegged to the U.S. dollar, is under downward pressure. So Ed first asked Lars how he sees the currency tension getting resolved. Here's what he had to say.
I think overall, China is facing two headwinds. One is a structural headwind where we can see a very significant slowdown on the structural side. As you said, China will have to invest less and consume more. That will reduce long-term growth rates. The catching up potential is smaller, very negative demographic outlook. All that is adding to a very significant slowdown in Chinese growth on the medium term. And then we're seeing this shock coming from the U.S. due to the peg. The dollar is strengthening, and the renminbi has, of course, followed through. and that is leading to a rather significant tightening of monetary conditions, which is also hitting the Chinese economy. And these two things combined, to me, there can only be one conclusion, and that is to let go of the peg and let the renminbi float sooner or later.
Well, speaking about that, the mini devaluation that the Chinese did in the summer seemed to be a watershed event that created all sorts of convulsions in commodity markets, bond markets, equity markets alike. The Chinese, they said that they did it to move to a more market-based approach. But they've been intervening massively since then to prop up their currency. Why did the Chinese actually do the devaluation?
Well, I think that it might have been a test, and it's very hard to say why it did it like this. It was kind of amateurish in terms of the delivery of it, because you cannot devalue by 1, 2, or 3% and then say there will be no more. When the market is expecting that there will be significantly more, that actually accelerated outflows from China. So they might have been better off not doing it at all, or going full throttle and just let the currency float. So I'm a little bit uncertain why they did it in this rather amateurish way.
Yeah, and the economy, as you said, was weakening. The last official numbers that I saw were for 6.9% annualized growth in GDP. And many people actually believe that overstates the situation. They think it's actually far worse than that. How far, though, will growth have to dip before the Chinese go for another mini devaluation if they're going to use this paradigm? And how much would they have to devalue before we get any sort of stabilization in their currency?
Well, I think that one thing is notable is that the market is clearly pricing in a higher devaluation risk as the macro numbers are continue to worsen and the slowdown continues. And I think one thing is notable, one can discuss the quality of the numbers, whether the numbers are manipulated or not. One thing that is notable is that nominal GDP is now growing significantly slower than real GDP. So we have actually declining prices, at least the GDP deflator is falling, and that has actually accelerated further in Q3. So quite strong deflationary pressures. And there's only one way to fight deflation, that's through monetary easing. And you cannot ease monetary policy if you're pegged against a currency where the central bank, the Federal Reserve, is tightening monetary policy. Well, so they will have to let go of the peg.
It does seem to a certain degree, though, that they're trying to use fiscal policy to sort this out. So when do they draw the line and say, you know what, fiscal policy is not going to work, it's actually going to retard the process of our rebalancing, and we need to take other approaches?
They can ease fiscal policy and taking steps in that direction, but then they will be sitting on a serious public finance problem sooner or later. The fact is that the underlying trends in the Chinese economy will continue to slow. But in the next 2 decades, China will have negative trend growth. So they cannot solve the problem by fiscal easing. They don't have the money to it. The only way to make sure that you don't have a crash in the economy is to allow the currency to weaken.
Yeah, is a so-called dollar bloc that includes China an optimal currency union in your view?
No, I have been very arguing this very strongly recently on my blog that the dollar bloc between China and the U.S. and also Hong Kong for that matter and the Gulf states, these are all currencies that are pegged to the dollar, is on the verge of breaking up. Whether it will happen now or over the next 5 years, I don't know. But given the structural slowdown in the Chinese economy, we will have to see some kind of adjustment of the monetary policy regime. That could be a one-off devaluation, but more likely it will, in my view, down the road mean that China will float the renminbi, and that would, of course, have ramifications for Hong Kong, but also for the Gulf states.
Tell me a little bit about the Gulf states, because we hear a lot about the Gulf states with regard to oil and how oil is declining, and they're having a lot of difficulty with their deficit spending. What's going on there?
Well, the story is essentially the same, that they have seen monetary tightening due to the strengthening of the dollar, and they have seen their currency strengthen, while other commodity currencies like the Norwegian krone or the Russian ruble has depreciated significantly. So there's been some pressure, and we're seeing very significant reduction in FX reserves in all of the Gulf states, very much in line with what's going on in China. And then, of course, also they're being hit by the fact that when China is slowing down, oil prices is declining, and that's hitting their economy as well. So they are very much pushed in the same direction, and at no surprise, the markets have been pricing in a greater risk of currency adjustments to that as well.
You know, as you mentioned, a lot of what's happening in China is because the renminbi is fixed to the U.S. dollar, And the Fed has actually been signaling tightening for some time. I would say that the first tightening came with tapering of large-scale asset purchases, and then obviously they gave the forward guidance that they're going to hike rates at some point in the future. Now the Fed says it's definitely going to raise rates this year. But, monetarist economists on our show, like David Beckworth, Steve Hanke, they've told us that they think this would be a mistake. How do you see it?
No, I fully agree with my friends David and Stephen that this, if a hike now, is in my view completely wrong. We can see in nominal numbers, nominal GDP, money supply growth, and for that matter, inflation expectations, that the Fed is beginning to undershoot quite significantly the inflation target, and we will also see nominal GDP growth, which have been on a 4%. Very straight line since the second half of 2009, which I actually see more or less has been the target under the Bernanke period. That will be undershot also this year and maybe also next year. So a rate hike, in my view, is premature, and the Fed have started to communicate too early about this.
All right, time for a quick break. Stick around because when we return, Victor Matheson is on the show. We'll ask him whether the world of fantasy sports should be better policed in light of this scandal we're hearing about. Then in today's Big Deal, Ed Harrison and I will break down what to look out for in the earnings reports from both Microsoft and Google. Big reports. They're both due today, Thursday, and we've got all the details, so stay with us. And as we go to break, here are the closing numbers at the bell.
As we ease into the 2016 presidential race.
Have we gone nuts? One of the largest foreign policy catastrophes ever.
Politicians I think it's time for congressional inquiry. Going to say, well, this is
what do these new rules mean for the banks? A case that legal experts
Something needs to be done.
Recently unsealed documents for 6 rows.
It's the biggest disparity in history.
Could spell the end of web surfing altogether. And just before you lose consciousness, you think.
That's really a great question.
What politicians do is something we don't do. They put themselves on the line, and they get accepted or rejected. So when you want to be president, why would you want to be? Why would someone want to be president? What's it like to be president? What's it like when the phone rings at 3 in the morning? Can't be a good call. I'm interested always in the whys and the hows.
And Q Larry. Question more.
People have got to know whether or not their president's a crook.
American people deserve to know answers.
What difference at this point does it make?
We must guard against the military-industrial complex.
The Cold War is over.
We shall never negotiate.
An American airplane dropped one bomb on Hiroshima.
To know war is to know that there is still madness. Yet, we do what we must.
The only thing we have to fear is...
I am officially running.
The future doesn't belong to the faint-hearted.
Welcome back to the show. The ACLU recently filed a lawsuit against an entire Mississippi city. Major tech companies have come out against a proposed cybersecurity bill, and the feds are going after DraftKings. Boombas, Bianca Ficini has all the details.
The American Civil Liberties Union is taking the city of Biloxi, Mississippi to court over operating an alleged modern-day debtor's prison. The lawsuit says the city regularly arrests and jails poor residents in a scheme to generate municipal revenue. The arrests are due to unpaid fees or fines, and once you're jailed, you can't leave until you pay off the debt or see a judge. The city responded in a statement saying they treat all defendants fairly under the law and even offer community service in cases where defendants are unable to pay their fines. Days before the Senate will vote on the Cybersecurity Information Sharing Act, 2 major tech companies have come out against it. In a statement, Apple said, "We don't believe security should come at the expense of customers' privacy." Dropbox issued the same sentiment, saying, while it's important for the public and private sector to share relevant data of emerging threats, that type of collaboration should not come at the expense of users' privacy. You can add Apple and Dropbox to the list of other tech giants like Yelp, Reddit, Twitter, Wikimedia that officially opposed the bill. And DraftKings received a subpoena from U.S. Attorney Preet Bharara after one employee allegedly misused inside data. This is after an investigator hired by DraftKings claims the employee, Ethan Haskell, couldn't have used insider information to win money from another site. Bharara's office is also investigating whether the company's model violates federal law, though DraftKings vehemently denies any wrongdoing.
Very, very interesting. Yeah, they are in hot water, both this DraftKings and FanDuel. But I got to ask you about DraftKings because this is not the only issue they are facing, right?
Yes. So the NCAA announced they will not be airing any of their advertisements during college tournaments and championships, which could get pretty tricky. And they also requested any information on any refs and officials that worked for the NCAA that participated in their contests. I guess we should call.
One person makes a mistake and then it sort of opens up,
blows up. So it'll be interesting to see how it ultimately affects that entire organization. I mean, that's just one of many, of course, but
absolutely. Well, it certainly has sparked a debate here, so we'll see how it shapes up. Bianca Vicini, thanks for that reporting. To continue the discussion on fantasy sports, Victor Matheson is on the show. Victor is a professor of economics at College of the Holy Cross. As we just mentioned, DraftKings and FanDuel were forced to defend their integrity after allegations surfaced of employees placing bets on information not available to the public. So I asked Victor if he thinks this raises questions over how the fantasy world is policed. Here's what he had to say.
Well, there's a real question about whether fantasy football is gambling or not. So far, it has not been treated as gambling because it's treated as a game of skill rather than a game of luck. And so, therefore, it doesn't fall under some of the same things that gambling does. That being said, we have very, very clear and strict legal issues related to gambling, where the state has a lot of control over how casinos will operate, how lotteries operate, how other gambling institutions operate, very specifically because they want the public to have trust in the casinos, trust in the lottery, trust in these gambling options. In some ways, it may be that these companies actually do want to be regulated so that they can essentially get a stamp of approval from the government telling people, hey, consumers, go ahead and play fantasy football, play DraftKings. Your money's safe there. You'll get paid, and you'll get a fair game. And so, in some ways, regulation's not a terrible thing at all for the casinos. Again, by increasing trust in these companies.
Well, what's so interesting to me is that fantasy really began years ago with just a group of guys really playing with each other, no money involved, but it's kind of turned into this behemoth business. And many critics out there say the setup, like you said, I mean, is really no different from Las Vegas-style gambling, which we know is not permitted in the sports world. So how did we get here, I mean, to an industry that's now worth billions of dollars?
Yeah, that's a really good question. And again, this idea that we should prohibit sports gambling is really a very uniquely American thing. Again, if you go to the UK, there's a betting shop essentially on every corner. You can bet on every game of the season. You do need to make sure that your athletes aren't being tarnished, aren't being influenced by the people who are making bets. But you know, it's an odd situation in the United States that we ban gambling, especially because in many ways gambling makes the sports that much more fun and makes people actually want to follow sports much more closely. Again, a lot of people who wouldn't be watching the NFL games at all watch that, tune in on Monday nights because they got one guy going in their league and they need 6 more points out of him to win their league this week. So, and very interestingly, Adam Silver, the commissioner of the NBA, has said, our prohibition on gambling is silly, and from this point on, the NBA is going to take a much more friendly view towards legalizing sports gambling everywhere in the United States. They're not worried about LeBron James tanking a game because someone's betting, someone has money on the line. They want to maximize the interest in their sport.
It's so interesting what you said. It really is a genius plan that they've devised, this fantasy, and they should really try to hype it up in baseball, because I know that baseball is actually losing viewers. But I want to move along now. I want to ask you about the proposed plan for the Pawtucket Red Sox Stadium. As we know, the plan was scrapped in late September. It was supposed to be built on a piece of public waterfront. And all of a sudden, the land was deemed unsuitable. But as we know, there was a lot of opposition. This was a huge debate in the Providence area from the get-go. What are your thoughts about what happened? I mean, is it clear to you that that opposition really played a role in why the stadium was scrapped?
Well, I don't want to play up my own role in this as well, but, you know, I was kind of one of the early leading critics there, along with lots of citizens groups there. This is an issue where you're taking a minor league team, a team that doesn't attract terribly many people, and those who do go to the games are paying ticket prices of roughly $10 a piece. And you were talking about the state, a brand new ownership group demanding subsidies well in excess of $100 million simply to move a team about 3 miles down the road. That's certainly, there's no way that that's good economic benefits for the greater Providence area. All you're doing is shifting money a couple miles away. And they were very, very kind of ham-handed about it here, where they said, well, if we don't get what we want, we'll move out of town right away. It really it really resonated very, very poorly. The other bad piece of luck for the AAA franchise, the baseball team, is just about 3 years ago, there was a major debacle in Rhode Island related kind of to baseball, in that Curt Schilling, one of the great Red Sox players, lost about $90 million of state money in a terrible business deal gone wrong. There was a real question about why the state would ever want to give a former baseball player a bunch of money to develop video games, but there they did, and he lost it all. And I think that gave people real reluctance to hand over a bunch more money to a bunch of new baseball players.
All right, big deal time here. I'm with Ed Harrison, and we are going to begin this discussion where we left off on Wednesday, and that is with Microsoft. So the company just released its first quarter fiscal year earnings. We know Microsoft has suffered from weak demand for PC services, but its commercial cloud service has been gaining traction. So Ed, tell me what happened. What kind of results did we get?
So the results were better than expected in terms of the revenue and income. Actually, if you look at Microsoft's numbers over the last 4 quarters, in terms of their earnings per share, they've beaten in every single quarter. So in general, they have been doing well. But if you look at the top line has been going down. The shares were up 5% on this news. But in general, people are giving Microsoft a free pass because they're moving to a new cloud-based model. And I think that at the end of the day, when you look at the breakdown in terms of their services, they're very strong in terms of the enterprise, and I think the shift to the cloud is going as planned. The real question is whether they can get any incremental revenue from hardware, which is, you know, from their Surface Pro that we were talking about in their Surface Book that we were talking about yesterday.
Right, that's their new hybrid tablet. But, you know, they have a lot of other products under their belt, and we've covered some of them on the show. Windows 10 that came out recently. Office 365 obviously keeps getting updated, and that's the bulk of, you know, their sales, I would think. So as an investor, I mean, what would, you know, those people be looking at? I mean, what do we need to see the most progress on, really?
You need to see a quick vamp over into the cloud in terms of the enterprise in particular. And I think that you want to see also their cloud computing platform, which is competing with Amazon's, doing well, because Amazon is killing it and they're getting great margins in that business. And you want to see Azure do as well, which is Microsoft's product there.
Okay, so it's all about the cloud storage. That's what it all circles back to. We always keep talking about it. Well, Google's earnings, as far as I understand, also just dropped. This comes as we're learning about its video service, YouTube, starting this new this new ad-free service for people, $10 a month. So it's kind of like a Hulu or Netflix, what they offer. And you just get to watch all these videos without ads, those annoying, pesky ads that we all hate at the beginning of the videos. But Ed, to me, that sounds a little high considering what you get. Yeah, it sounds a little high. So my question is, I mean, does that make sense to you? Do you think they really need $10 a month out of subscribers?
Well, you know, the media has been totally misplaying this, what's actually been happening. They actually did a beta test of music videos at $8 a month earlier. And they also have an existing service, which is Play Music, which is an equivalent of the iTunes subscription model, which is the equivalent of the Spotify subscription model for $9.99. So they're actually, what they're doing is they're taking the $8 subscription and the $9.99 subscription, putting them together, giving you access to music, both in terms of videos and in terms of actual, you know, audio, and you can have them both together, ad-free for $9.99. So what they're saying is, you can get this stuff from these other guys, but hey, we're giving you more. We're giving you all of YouTube without ads, and we're giving you music videos from YouTube.
So it's almost like they're really trying to compete with everyone in this space in terms of streaming. Netflix, Hulu, Pandora, Spotify, all of them.
They're really trying to move into content. This is their big push into content, and they're going to have their own content on the back of this.
What else, really quickly, should they be looking for? Should people, now that the report's out, what should we be looking for in terms of how to assess growth?
So I put a list of 5 things together here that we're going to put up on the screen. I'm going to just go down them really quickly. We're looking at the retail model that they have in terms of their click-to-pay feature. That's basically, I want to buy this thing, click, boom, I bought it. Advertising, we want to see, you know, this ad-free model, how this works. Then I think there are 2 different things in mobile. You want to see basically how well they're going to do in terms of their reach for the Android product, because everything's moving to mobile. And in particular, how are they going to monetize mobile? And that's definitely Google Play. The app install ads are a very interesting thing, because apps are where other companies are getting their ad revenue. Google's missing out, and they're trying to get that from there. And then finally, Sundar Pichai, he's the new CEO. He's getting in there for the first time. It'll be interesting to see how he does.
Yeah, absolutely. That's a huge deal. And really quickly, the other company that has its earnings out is eBay. That's their Q3 earnings. How'd they do? How's life after PayPal?
Good. You know, they beat earnings. I think, you know, I've been talking a lot about the end of cycle and so forth, and that we're late in the cycle and so forth. But all 3 of these companies are doing really well. I think that eBay, they're moving back into small and medium-sized businesses. They really want to focus on that, go away from huge businesses and focus on what they really came to prominence on, and they're in the throes of doing that right now.
There you go. All right, Ed, we've run out of time. Always good to hear your assessment. All right, we love hearing from you guys. So tweet at all of us, Aaronade, Edward, NH, Bianca Pacini, and at yours truly, Amira David. Remember, you can see all the segments featured in today's show on YouTube, youtube.com/BoomBustRT. From all of us here at Boom Bust, thanks. We'll see you next time.